Welcome in Harsha Razdan, who's from KPMG, tracks the consumption pack very closely. Harsha, thanks so much for taking our time for us. Everybody has been talking about the rural economy, but you've done some interesting analysis, a big market poll you have done, which suggests that it's not only the rural space, but also tier 2, tier 3 cities which will drive the consumption.
You're right. Actually, we just released a report which actually covered 2,500 plus consumers called Time to Open My Wallet or Not. And it showed significant differences between tier 2, tier 3 and tier 1. And the tier 2, tier 3 cities seem to be much more bullish about spending money over the next 6 months. Tier 1 cities. Tier 1 cities were primarily occupied about health, hygiene related areas, and the consumption patterns are significantly supposed to go down in the tier 1 cities.
Right. So, when we talk about rural recovery, how tier 2, tier 3 is different, or does it belong to a part of the rural recovery?
So you're very right. Actually, the tier 2 and 3, mainly the tier 3 is a part of the rural economy. Some other interesting thing which will sort of put this to light, we looked at spending in general. Now, when you look at spending in general, 78% of our respondents said that spending is going to go down. So that, I think, is pretty much clear. As we look at it, whether it is rural or urban, everyone is sort of going to have some kind of an impact. In this scheme of things, we realized that tier 2 were a little more bullish and tier 3 even more bullish in terms of what they would spend. And the tier 3 economy, tier 3 cities will be primarily the cities which are in the agricultural economy. We do know the amount of effort that the government has put in around agriculture and the rural economy. We also do know of the reverse migration that has happened. So I think in one way it is not very counter to our logic that the tier 3 and tier 2 would have such kind of a swing, and the rural economy will continue to see this kind of a boost as we go forward.
All right. Hi, Harsha. This is Mubina as well joining in. Now, interesting that you believe that should I open my wallet? And the answer is yes, from, not just rural, but even tier 2 and tier 3 cities, and even more so. The question is, where are they spending? Is the willingness to spend towards discretionary items or perhaps more premium items in nature the same? Or maybe higher? Or do you think that yes, while they do want to open their wallet, it's mostly for the more economy segment of any product, and would rather down trade as opposed to up trade at this juncture?
Ravina, I think it's a very pertinent question. Clearly, I think we've seen people down trading in terms of what they buy. If you look at essentials, clearly the one was around down trading. It'll be important for brands to hold on to what consumers they had, and I see a risk of down trading happening there. But if you look at non-essentials and non-discretionary, I won't say essential, non-discretionary, the big ones were furniture. Logical, because a lot of us have started working from home. Call center employees have started going back home to try and work through the call center work. So furniture was big. There was electronics, because now you don't have access to the kind of office furniture, office gadgets, etc. that you had at office. So now sort of you're at home looking at your own iPad, trying to get headphones, trying to get other gadgets that make you comfortable. And thirdly was also apparel. And significantly on the apparel side, a lot of it was around topwear. Things that we wear at the top. So I guess these were 3 big trends, I would say, on the non-discretionary side, which we saw very, very strongly coming up.
Okay, all right. Well, an interesting trend being witnessed over there. There's something else also you have that's caught our attention in your report, and that's the payment mode and the purchase mode. Usually, we're very well aware about how urban customers have caught on not just to online shopping, but also using digital modes of payment. However, interestingly, you have noted that UPI and wallets are now forming 1.3x of card payments, and online channels have grown 1.6x. I want to understand that is this for all over India, and what is the trend that you're witnessing in the tier 2, tier 3 markets? Do they still prefer the traditional modes of payment, the traditional modes of shopping, or they as well are now leaning towards e-commerce, towards UPI payments, etc.?
I think everyone in the country is has the fear of COVID. Very clearly, when we did our research, we realized 70% of the people interviewed thought that the biggest risk to the spending is going to be the fact that they may have some stress around the job, or that they may be infected by COVID. These are two big stress points for them. So everyone has tried to avoid any kind of physical cash handling as much as possible. And when you look at digital modes of payment, the trend has been across the country, and there's been a bigger switch or shift towards UPI and wallets, even more than card payments. I know card payments can also happen through online, through when you're talking to people on the phone, but still the UPI and wallets have had a huge impetus, and that has not changed whether it's been tier 1, tier 2, or tier 3. All across the country, we've seen this drive.
Right. So, just taking this point forward, see, digital transformation had to happen one day or the other all across the country. Do you think people are now very clearly aware about wanted to change, but was slightly resistance to change to the digital space, and now sooner or later, people will get accustomed to it? Maybe it becomes a part of life in the post-COVID world.
It's a very valid observation, and I think from the tier 1, clearly so it's happening. I think the consumers that we talked about, at least the tier 1 people, and when you go up the income class, people have not wanted to even go out of home to get anything at all. So clearly they want to do 100% of their purchases on an online or on an online format. As you've gone down and moved into tier 2 and tier 3, the top cream of the population has tried to move as much as possible to digital. And when we move to, let's say, the people who are the SEC B and SEC class of people, clearly those people have some way to go, but it's understandable because there has to be a little bit of change in their mindset as they go in, and they still prefer the fact that they can do some kind of cash payments. But I guess the tsunami in favor of the digital transformation has started. It's only a matter of time where everyone will, over a period of time, get accustomed to being more and more digital.
Right. So just, before we end, I would just like to ask you that what are the interesting categories that you would watch out for in terms of consumption recovery? Of course, there will be a change in the pattern. It's a new reset. It's a new way where people are living. Which categories do you think will be interesting to track in terms of growth data, supply data over the next couple of quarters within the FMCG pack?
Okay. From a essentials perspective, I would say anything which is in food and beverages would have a stronger impetus, and it could be things around biscuits, snacking habits, ready to eat, and beverages are consumed at home. These categories will actually have a huge momentum that may sort of be unprecedented in the past. When it comes to personal care, things like ice cream, etc., which are more used to outdoor purchases, they will take some bit of a beating. But may come up over the longer term. But certainly over the next 6 months, it will be a difficult time for these categories. On the non-discretionary spends, as I did mention that the big categories could be furniture, it could be electronic items, it could be top wear in apparel. These seem like the bigger trends to look at. One more category which had come around very strongly was the whole area around nutraceuticals and mineral health supplements. All of us are trying to be as cautious as possible and build immunity. And we see that that's also playing out in terms of what we purchase from a nutraceuticals, health and vitamin supplement perspective. So that's in summary what I would look out for.
Thank you so much, sir, for taking out time for us. Always good to get perspective from you.